The Rebel Capitalist Show. I always tell people that my personal portfolio, I like to set it up in a 10-80-10. And what that means is 10% for insurance, and I just consider that physical gold, and then 80% in investments. And I define that as something that pays me to own it. So
Okay.
that would be a rental property or a dividend paying stock. And then I kind of go back to Jim Rogers and say, ideally, what you want to do is you want to buy things when they're cheap and you
Yep.
want to sell them when they're expensive. But the
Yep.
pushback I always get, especially from Americans, is George, nothing's cheap. We're in an everything bubble. But I
Very
think
true.
what they're missing is they're just getting hyper focused on the S&P 500 or just
Right.
the stocks in the United States or dollar denominated stocks. When if they could just kind of expand their horizons, they would find opportunities out there where there are stocks that are super cheap. Can you dive into that?
Yeah, that's kind of what led me to where I am. It was a dovetailing of the fact that I had been here on the ground in 2018 and seen, businesses that dominate here in the country. One of my biggest investments is the biggest cement company rather here in Tanzania.
Mm.
And I actually have a company called One Fair Investments, and the One Fair is short for it's an agglomeration of wonderful and fair, as in Buffett's old quip about buying wonderful businesses at fair prices.
Right. Right.
Ideally cheap prices, but fair prices are fine if you're buying a wonderful business. So that's always been my kind of driving motivation. And as you say, if I looked at the US market, I couldn't find any wonderful businesses at fair prices. I could find plenty of wonderful businesses. And that's the beauty of the US. I mean, you guys know how to build really successful businesses, but they trade for, to a value investor like me, prices that are way too high. So I scoured the world. I had been writing this newsletter for Sovereign Man, the fourth pillar it's called, where we focus on deep value investments. So we just buy cheap stuff. And in Asia, there's a lot of cheap stuff around. But they're not wonderful businesses. They're mediocre businesses that are really down on their luck and trading very cheaply. The old Ben Graham style investing, if you like, cigar butts. Where
I was just going to say the cigar butt, right?
You buy it so cheaply and then it revalues and you sell it and you've made some money. And I kind of got gradually more fed up with that because is there a lot of hard work to find these things, invest in them, and then endure the pain of watching and waiting and nothing happening. Often value stocks go down before they eventually re-rate. And I thought, there's got to be a better way. And African blue chip stocks is now my focus because there are a lot of wonderful businesses and they are trading at fair or even cheap prices. I mean, we have a blended PE for the portfolio in the fund that I run that's not even 8 times. And this is for the bluest of blue chips. These are the dominant companies in their industries in the countries where we
Yeah, I know
invest.
last time we talked about a beer company.
That's right. So actually, there was a bit of a flurry of excitement today. Tanzania Breweries is the stock that we own here in Tanzania. It's a dominant beer company, got about 80% market share. And their competitor has been doing pretty well, in fairness, recently. So there's been a lot of guys kind of wondering and waiting when they're going to fight back. But just today, they announced that they've come out with a new, brand new brand, and they're going to launch that soon. And they're fighting back against the competitor, which they should have been doing all along, given that they're so dominant. They can spend a tiny fraction of their revenue on a marketing campaign and basically blow the other guy out of the water. But they had been acquired by AB InBev out of Belgium, which also owns Anheuser-Busch AB. And they kind of lost their way a little bit. But that's one that we own a lot of because it's really been smashed and it's obviously a dominant, almost a monopoly business here and will do very well long-term given the young demographics here in Tanzania. Telecoms are another big
what are the
growth
dividends on those,
industry.
Tim?
So TBL, Tanzania Breweries, is not paying large dividends at the moment, but for our portfolio as a whole, we're on about 8.5% yield. And a lot of that is from the banks and the telecoms and things like that. So
Right. That's fantastic.
it's a pretty good valuation considering that these are, the dominant companies. and they have a long growth runway ahead of them. And it's really one of the few places in the world where you can find that kind of valuation at the moment. Some of the Asian markets, West Asia, the Stans, Uzbekistan has been doing very well for a friend of mine. I don't know whether you've had him on, Scott Osheroff. He's managing a fund there. So that's, this part of the world is really good pickings at the moment.
Yeah, I'm sure most people would push back and say, okay, Tim, I get it, but what about the political risk? How do you determine
that's always
that?
the case in Africa. Political risk, currency risk, that sort of thing. So we try and have a macro overlay first before we go and dive into the micro. So Tanzania is one of the rare countries in Africa that's never really had any ethnic strife or civil wars or anything like that. All of the former presidents of Tanzania have retired, and lived on in the country in peace. A lot of African countries, the president either gets shot or he has to flee and live in exile. It's not like that here at all. But yeah, we filter definitely by political risk and currency risk. Those are the two main ones. Zambia was out of bounds for currency reasons until recently. It seems to have turned around. They just had an election and they booted out the former president, and a new guy who's actually got experience running businesses is in power. Nigeria is out of bounds at the moment for both political and currency risks. My comeback would really be, well, show me a place in the world where there isn't any political risk in this day and age. You know what I mean?
Right.
Africa has always been viewed as risky. But to me, on a relative basis, it's less risky now when you compare it to a lot of these other countries, which are also facing, a lot of political risk and division. Obviously, the US being a prime example, but it's hard to really point to anywhere in the world where you would go, okay, that's a really stable place and it's going to stay that way for 20 years, and I'm happy investing my capital there.
Yeah,
so
right.
it's still very important to be careful, not to end up with too much of your capital in one country that goes down the tubes here in Africa. But I'm fairly comfortable with Tanzania and
what's your opinion of the gal there?
So I mean, she seems to be more of a outward-looking president than Magufuli, the former guy. He was very nationalistic, and too much so even. He didn't like foreigners much. He was a bit xenophobic. There's a balance, right? You got to stick up for your own people in your own country, but you also need to invite people in who have capital, who can help you develop and grow and transfer knowledge and technology. So that's the biggest change. So it's more friendly now here for foreign businesses, and investment is flowing in again. So those things are very positive. Whether it stays that way longer term, we're not sure. It's still very much a sort of a feeling of the way for the current president, and the honeymoon period, if you like. But it's pretty stable. That's the main thing here. There's only one political party that has any clout, and everyone's kind of on the same page that development of the country has to be goal number one. So in that respect, we're traveling okay. I'm perfectly happy with the way things are going right now.
How are the corporate taxes in these areas generally?
They're kind of mid-range, similar to the US. Here in Tanzania, it's 30%. There is a VAT, which is a little bit too high, in my opinion, 18%.
Wow.
So as an entrepreneur, it's pretty tough here. So for me, investing in big blue chip stocks, what I like to say is that those companies are actually even more protected. Their dominance likely to continue.
It creates kind of a moat around them.
Yeah, it's hard to come in as an entrepreneur and start something. Now, to get my residency visa here, I started a business. So I've been through all that, rigmarole of registering a business and getting a tax ID and a work permit and a business license and yada, yada, yada. So for entrepreneurs, I think this is a tough country unless you have a real golden opportunity that's a slam dunk and the profit margins are so high that you can, give some of this away to the regulation costs and the taxes. But from my point of view, as a public markets equity investor in the big blue chips, that's no bad thing. It's kind of quirky, because I'm all for people starting businesses and low taxes and freedom and so on. So maybe that's something that a lot of these countries are still getting wrong, in fact.
Yeah.
But from my investor's point of view, it's no bad thing, because that's kind of the paradox.
Yeah.